The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey, this is the Tax Lady, and this is our hour to talk taxes. And hey, look at it's what today is. I don't even know what day today is. The 8th today?
It's the 8th.
It's the 8th. And on the 18th, it's over 10 days. And I know everybody's scurrying around who hasn't filed yet, and people that have already filed might be getting letters from the IRS and need help. And we're here to help you. 803-0930, 803-0930, star 930 on a cell phone, and we want to help you with your last-minute tax planning, last-minute taxes. If you filed, if you've gotten letters, if you're worried about next year, give us a call, 803-0930, star 930 on a cell phone. Want to talk about last-minute tax tips, okay? The first thing, if you're somebody and you know who you are, you're getting the guilt. You can feel the guilt kind of coming up. And you hear the voice of your mother saying, have you done your taxes, Frank? Have you done your taxes, Pete? I mean, you hear her saying, have you done your taxes? And you're feeling guilty, and the first thing you have to do is, give into that little voice and say, yes, Mom, I'm going to do my taxes. So the first thing you got to do is decide you're going to do it.
That's right.
Because what happens? Oh, and this is Tiff Fabian.
Hey there. It's so good to be sitting
out in
here.
The sun and
oy,
everything.
oy.
But anyway, so that little voice that's making you feel guilty, it's because you really should feel guilty. And the important thing is to decide to do your return. And I will tell you, you can come in with 10 years returns. We'll get them done.
And like you always say, I think this is so apropos. The jig is up pretty soon.
In 10 days.
Yay!
Right.
I'm counting.
By the way, if you're looking for tax help on Sunday, we have two offices that are open, one at the McKinley Mall and the other at the Niagara Factory Outlet Mall. So you can come in. We have Sunday hours. The rest of our offices are closed. We do have a corporate tonight open till 9 o'clock. So if you are out having dinner and you bring your W-2s, you can come into our corporate office at 2475 Niagara Falls Boulevard. And we have staff that are taking walk-ins tonight too, so trying to help people.
Right.
So the important thing is you should decide that you should do it because it starts off with making that decision.
That's right. That's right. And when you come in, we really sort of help you dot your I's and cross your T's and make it much more easier.
I had this lovely lady come in, a mom and her son yesterday. It was so cute. And she says, I want to make sure that he knows what he's supposed to do. So she hands me the 2016 W-2, and out falls the 2014. And I said, did he do the 2014? She says, nah, we're just going to do the 16. And I says, he's got a $250 refund coming, Mm-hmm. So I did the 214, and on 2015, he only got $50 back.
Right.
But on 2014, he got $250. So, I talked to him about withholding because
That's
now
cool.
He's going to get out of college and everything. So,
or I talked to them about putting money into a 401k or
an IRA.
Yeah,
right. I had
yeah.
another young guy this morning, just got out of college. And so I said, have you thought about an IRA? And he said, no. But then I showed him how much have he put money into his IRA. And then he said, well, I would really like to buy a house. Well, one of the exceptions to penalty is if you take up to $10,000 out of your IRA to buy your first home.
That's right. Yep.
So
I did
all those
this
kind of
week.
things are so important. So if you're sitting there and you're thinking, oh, I just don't want to do this, I understand. I think this time of year, procrastinators or people that think they owe money. I had a couple that just came in.
I had one yesterday.
Just before I left. They had sold their home.
Right.
And they had like a $150,000 gain. And I said, you lived in it 2 out of the last 5 years. It's tax-free. I thought they were going to fall on the floor.
I had
they had no idea.
I had somebody yesterday who took $17,000 out of an annuity. And so he had a 1099-R, and he was so nervous to come in. But the truth was it was all return of capital, and none of it was
Not
taxable. And so he was so happy.
See, but people don't know how to read these kind of things.
Right.
You know? Anyway, I'm Esther Gulius, the tax lady. The show is a lot more fun when you call in 8030930, 8030930, star 930 on your cell phone. Okay, the other thing is, make sure you have all of your income when you're filing your return, because maybe you know that you got unemployment, but they didn't mail it to you this year, and so you think, I'm just not going to report it. I'm going to tell you, the IRS gets a copy of what you think that you don't have, and they're going to send you a bill, which is going to make your return possibly get audited.
Right.
Right? So, and by the way, if you did get unemployment and they didn't send it to you, they didn't send it to anybody. You have to call and request to have it mailed to you. Otherwise, you go online to New York State Department of Labor. You go in like you're going to file for benefits, and you go down there. Your 1099-R is there. And if you filed already and you didn't include your unemployment, you still have till April the 18th to amend the return and get it all squared away so they don't penalize you.
That's right. It's so they started this last year where they didn't mail you a statement, and it really caught people off guard because there's a lot of people who don't use computers readily.
That's true. But I will tell you, if we do your return, we'll go to New York State Department of Labor with you, if you have your password and everything, and we'll download and print it off for you. So, Again, make sure you have all your income. Report the sales of your stock. If you got a 1099-B form, you want to make sure that means that you sold stock. You may think you didn't sell stock, but you did sell stock, and you want to make sure you put that on your tax return. Again, if you don't, they'll send you a bill in the summer, ruin a great summer day. You know, we love summers in Buffalo. And so if you aren't sure, come into one of our offices with your forms, and we'll explain them to you. Right?
It's there's young people, like you said, who come all the time, and sometimes their parents have them come because it's very informative, and there's a lot to learn and take.
Well, there is.
The 1099-B and the 1099-R.
Like, for instance, many of you are paying brokerage fees, which are tax deductible.
Yeah.
That's where it's on your brokerage statement, and they call it advisory fees, and that's where you find it on your brokerage statement.
Usually on the last page.
Right.
A lot of money sometimes.
And the other thing is, many times people don't want to report a rollover. They go, I know it's not taxable, so I'm not going to put it. If you got a 1099-R form, you have to make sure that you list it on the tax return, because otherwise they run a computer scan against what they got for 1099-Rs, and if it's not on there, even though it's a rollover, it can trigger an audit and a letter in the summer.
It's so cute. People always invariably, I know I don't really have to give
and
you
they got
this
it in their
form.
lap, right?
And they have it in their lap.
Yeah,
it's so
that's
cute.
So cute. It is cute. Anyway, I'm Esther Gulius, the tax lady from EG Tax. 8030930, 8030930, star 930 on your cell phone. We're going to go to Ben in Lancaster. Mr. Ben, how can we help you, sir?
Yeah, hello. Thanks for taking my call.
Yeah.
The reason I'm calling, in my Roth IRA account, I've got, a stock that I bought over on the New York Stock Exchange.
Yeah.
And basically, it's, I believe this one is ETE, and it's a master limited partnership.
Okay.
So apparently that master limited partnership triggers a Schedule K-1.
Right, but you don't put it on your tax return.
No matter.
You don't, because if you take a look in the center of that K-1, it's going to say IRA, and because it says IRA, it does not go on your tax return.
Okay, I'm looking as we speak. Oh boy, as we speak, I don't see it.
Okay, well, if it's in an IRA on that K-1, it'll say IRA, and if it says IRA, it does not go on your tax return. If you want to take a picture of it and send it to my email, I'll take a picture of page 1, even with your cell phone, and send it to my email address, and that's egtax@hotmail.com.
Ben, is it a K-1 that you're looking at right now?
Yeah, it is.
Hotmail.com.
egtax@hotmail.com. Then I'll look at it, and then I will email you back and tell you if it's got to be on your tax return.
Is it a K-1 that you're looking at, Ben, right now?
Yes, it's a K-1, Tiffany.
The Schedule K-1. And it does say here under number H11, what type of entity is this partner? And it says IRA.
Yay, for Ben. You don't have to send me a picture then.
It doesn't go on your return.
It doesn't go on your return.
Like Esther said.
Boy, I looked up the information that the IRS gives on it, and the information that I gleaned from there said that if the unrelated business taxable income.
But you see, it's not business taxable income. It is it's in an IRA, and it does not get reported. Ben, do what you want.
Oh, yeah,
but I'm telling you, it doesn't go on your tax return.
Even though I
Ben, it's in your IRA.
No, I know, and this instructional information is under whether it says it's specifically to a Roth IRA.
All right, that even is more
reason
because a Roth is not taxable. It doesn't go on your tax. Ben, you can do what you want.
Ben, really, it doesn't go on your tax return.
If I was doing the return, I would not put it on your tax return.
If
when
Chris
I see K1s with IRAs on them, I just
discard it.
I just flip them over because they're just information.
So in my situation right now, there's, because I've done my taxes successfully as far as I know so far all these years, there's no reason for me to come into your office with this question. You're going to treat it as I was hoping to treat it.
Yeah,
information.
As nothing. It's information.
Okay.
Okay?
I'm still scared, but
Well, Ben, right there, Esther Golia says, I don't have to claim it.
I think the public...
April the 8th, 2017 at 3:17 p.m., honest to God, you don't have to claim it.
Yeah.
Okay?
Yeah. If anybody ever looks under publication 598 and finds something different...
They won't, Ben. It's not unrelated business income. It's in an IRA.
No, I understand.
All right, well, we won't debate it. Do what you want. I'm very happy to help you. God bless you. Happy Easter.
Thanks a lot.
Bye-bye. Okay, anyway, we're going to go take a little break, and I'm going to walk around the room. I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We're going to take a short break, and we'll be back with your calls on the other side.
That's a happy song. It's the Beatles?
This is Celia.
Oh, good job.
I don't know who did it, but I know that's Cecilia, right?
Simon and Garfunkel.
Jeez.
Breaking my
I'd know
heart.
that. You're breaking my confidence daily.
There's one of my clients I do. She goes, I love listening to the show, and Esther always guesses the songs. That's what she says.
Guesses them wrong. Hey, I'm Esther Goulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone, and we have people that have been holding a long time. We're going to go to Mike. Hey, Mike, how can we help you, sir?
Hi. I was wondering if you could help me out.
Sure.
I've got a dependent that I claim. She's lived with me 12 months out of the year. I support her completely except for a few $100s that she earns. Now, I'm doing the New York State side of my return, and I'm inquiring about the New York State long-term care insurance premiums.
Uh-huh.
Am I allowed to put that on my return, or does she have to put that on her own return?
Are you paying long-term care for the dependent?
Yes, I am.
It has to be for you. It's a medical expense if she's a dependent on your tax return on your Schedule A. But the long-term care credit is for the taxpayer and the taxpayer's spouse.
I'm sorry, I didn't get the last part. But...
It's for the taxpayer and the taxpayer's spouse.
Oh, I see. So I can claim her on the New York side of the return, use her medical deduction,
right?
Whatever.
Right, but you have to. Your medical from the federal comes over to the state.
Okay.
And the long-term care insurance is for the husband and the wife, or the husband and the spouse.
Okay.
Okay.
All right, and you have no problem doing an amended return from 2014.
No, because which really brings me to a great point, and I appreciate it. 2013 is closing April the 15th. So if anybody has anything that they need fixed, then you only have till April the 15th of this year to amend the 13 return.
Okay, because I have some HCTC credit for 2014, and they changed the law in 2015, and they made it retroactive. And I got to tell you something, it's a little bit difficult for most of us people how to figure that credit out, because I did have advanced payment that year from the government. So I'll wait till after the 15th and give you folks a call.
All right.
The show, it's great.
All right, thank you, Mike. Appreciate it.
Thank you.
Bye-bye.
Yeah, and then don't forget, Mike, that Esther raised a really good point that dependent, you get to claim all their medical expenses that come out of pocket on the Schedule A. And I think you said that.
Right. Now, it didn't sound like this was a dependent child.
Nope.
It sounded like this was a dependent friend.
Right.
And a dependent friend, like you said, has to live in the home the entire 12 months.
Right.
But the dependent friend cannot have gross income, taxable income over 4050. So Social Security is not taxable, but they cannot have like an annuity or a pension or interest over 4050 and still be claimed as a dependent. Okay, let's go. Again, 8030930, 8030930, star 930 on a cell phone, and we got Chris in Cheektowaga. Hi, Chris. How can we help you, sir?
Hey, I'm self-employed.
Yep.
I have one employee.
Yep.
And I get my health insurance through the health exchange.
Yep.
And I'm getting conflicting information as to whether or not my payment for my insurance is a deduction to me.
Sure it is. It's a self-employed. All right. It all depends. All right, let me back up. Are you getting subsidies?
Yes.
All right. Well, so only the amount that you paid for your insurance is going to be taxable. So if you didn't pay anything because you got full subsidies, then you won't have a deduction. But if you did pay, then you have self-employed health insurance if you have a net profit on your Schedule C.
So possibly.
So do you got a net profit on your Schedule C, Chris?
I believe so.
All right. So if let's say your bottom line is $1,000 after all your expenses on your Schedule C, then you're limited to the non-subsidized portion of your health insurance, limited to the $1,000 as a page 1 adjustment for self-employed health insurance.
Did you receive a 1095A, Chris, for your marketplace insurance?
I did.
So don't forget to do that allocation form on the 62 or the 8965, 62.
Right, to see if you have to pay back any of that
subsidy.
Okay.
Okay?
And then don't forget, like Esther said, that if you have a profit, it's an adjustment to income on page 1 of the 1040.
If you have health insurance.
And if you itemize, you can also put it under medical if you have enough to itemize your medical too. So there's several places where it would possibly go.
Okay. Hey, I really appreciate your help.
All right. Thanks, Chris.
Yep.
All right. Bye-bye. I'm Esther Gulius, the tax lady from EG Tax, 8030930, 8030930.
Star 930.
I know it's something. Star 930 and so forth. All right, let's talk about, we're getting our calls in. What if you owe? Right? There are people that owe that have the money to pay. Who don't want to pay.
Right.
Who wants to pay? Nobody wants to pay. You have to pay, though. And they will enter into an installment agreement with the IRS, and they're going to pay the 0.5% per month up to 25% for not paying, and the interest, and they have the ability to pay. Now, I talked to a client yesterday, and I said, and actually she was a lovely lady, and she was really between a rock and a hard place, but she's been making these payments. I said, don't you have like $80,000 equity in your house? And she said, yes. And I said, don't you owe the IRS like $6,000? And she said, yes. And I said, well, why don't you do a home equity credit line? Because the interest is fully deductible, and it's at a much lower rate. But the interest that the IRS is charging you and the penalties are not deductible, and it's at a higher rate.
Makes sense.
Right. And plus, it affects your credit.
Right.
So, if you can pay. You can put it on a credit card too. Yep. Now, and some of these 0% credit cards, that's a deal. It's a better deal than the IRS, and of course, that's if you're going to be able to live within the parameters of that credit card.
Right. Right.
So, there are numbers of websites that you can get that will allow you to call on the big day, April the 18th, and put that balance due on your credit card.
Yeah, I think you can also call 1-800-2-PAY-TAX, and you could do it over the phone, too.
That's exactly right.
Yeah.
And the other thing is, if you owe, look at doing an SEP or an IRA. I had a couple the other day that owed, I don't know, I forget, like $29,000 or something.
Right.
And they were self-employed, and they're very successful entrepreneurs. So they were able to put like $42,000 into an SEP. So when they put the $42,000 in the SEP, it saved them like $12,000 in taxes.
And that's their money in the
Right.
SEP.
So they said, but we can't pay then the reduced taxes, which were like $29,000,
Right.
and put the money in the SEP. And I said, well, you pay the $29,000 that you owe on April the 18th, and then we extend till October the 15th to send in the paperwork, which then extends the time to make the contribution to the SEP.
That is so cool.
And they said, are you sure that's legal? And I said, absolutely. So I opened up my book and I showed them. But there are many ways that, and so then there's that money in the SEP, which
Right.
is their money, and they save $12,000 in taxes. And there are things that you can do if you're sitting out there with a liability that by moving money around, you can do it.
Yeah, so cool. And
this particular couple have, I said you have no mortgage. So if nothing else, you could take $42,000 in a home equity
Right.
and deposit the money right now. But it would have cost them something. But this way, they were going to save up the money.
Wow. Wow.
So
but there's tools in your toolbox.
there are tools in the toolbox. I'm Esther Goulias, the tax lady from EG Tax. 8030930, 8030930. We're going to break for news. We'll be back with your calls on the other side.
Here comes the sun, here comes the sun, I say it's alright.
Let's see, what's it? Little Darling. I know all those words, so I just don't know the name of the song. What's the name of the song, Frank?
Here Comes the Sun.
Oh, Here Comes the Sun. Yesterday was Here Comes the Snow. Hey, we got, look at 10 days until the big day, you guys. 8030930, 8030930, star 930 on a cell phone, and we certainly want to help you. If you're sitting there struggling, beating your head against the wall, got letters from the IRS, because they've been pretty. Have you seen it that they've been sending letters out before they send out the refunds?
Yep. Letters I've seen about college credits, letters about
the
child,
the 1095A forms.
Yep.
If you had health insurance on the marketplace. Okay, let's talk about things that people miss. They miss stock basis adjustments. In other words, let me put it into plain language. Let's say you paid $10,000 for a stock and you've been reinvesting dividends, let's say $200 a year for the last 10 years. Well, then that means that you invested $2,000 in dividends, which brings your basis up to $12,000. So if you sold it for $11,000, you don't have a $1,000 gain, you have a $1,000 loss.
That's pretty cool.
Right?
So that's why bookkeeping is so important.
And nobody likes to keep books,
Right.
We do.
Because you're busy.
I like to keep books.
Right.
But anyway, stock basis adjustments, if you don't keep track of your stock and you're reinvesting dividends, you're overpaying your taxes, plain and simple. Sales of inherited assets.
Yep.
Right? If you inherit grandma's house and it goes through the estate, then you get a stepped up basis.
That's pretty cool. And you want to make sure that you take advantage of that situation.
Right. Because then if you sell grandma's house and grandma paid $10,000 and it was worth $100,000 when she passed away, your basis is $100,000. So if you sell it for $100,000, there's no gain. But if you go back and do grandma's back to 10, you're going to pay taxes that you shouldn't have had to do, right? Capital loss carry forwards.
Right.
Especially people that are doing their own returns or are switching accountants.
Mm-hmm.
If you had a capital loss carry forward, that's carried forward until that loss is used up. You want to make sure that if you've switched accountants or you're doing your own return, that capital loss carry forward is listed on this year's return.
Yeah, whenever I was just doing a person's return who moved back here from Utah, he's a minister, and that was one of the first things that I looked to see if there was any carry forward loss from the other return. And so when people ask you for a copy of last year's return, that's a prime example.
That's a good reason. The other thing is, was with a gentleman yesterday whose family, his wife and he got a divorce. They have 4 children.
Right.
And they have 50-50 custody, but she's the residential parent.
Right.
So I said, well, why don't you get her to let you have one of the children to be residential parent, because they're splitting them almost equally, and then he would be able to be head of the household.
That's
right. And so and it's like a no-brainer because it's not going to hurt her at all. She's got all these kids, and she doesn't pay really any taxes but the earned income credit. She's got the maximum earned income credit. So if families could get together and realize that by not fighting, there's ways to work it out so the family benefits.
Right, that's right. When I talk to people, I'm like, this is what's best for the family. And you sort of write it down in black and white, and then it makes more sense.
And this particular gentleman is paying taxes with his child support through the New York State withholding thing that they take out of his paycheck. So he qualified for the non-custodial earned income credit on New York State. So that's another thing people often forget is that if you would have qualified for the earned income credit, but you're the non-custodial parent, you get and you're paying your child support through the New York State Collection Unit, and you're on time, you would get an earned income credit on New York State for the kids that you can't get an earned income credit any other
federal,
way.
Right. That's right, which is a nice advantage.
Right. I'm Esther Gulias, the tax lady, 8030930, 8030930, star 930 on a cell phone.
And then when you're talking about New York, there's also people who miss the fireman credit. And then
that's true. If you're a volunteer firefighter, there's a $200 firefighter
And then
credit.
if you're a volunteer fireman and you get a pension for your years of service, you can also back that off the state return too.
That's exactly
And there's so many people that miss that too. So that's tax-free on New York.
That's exactly right.
Yeah.
Net operating losses. Let's say you started a small business and the first year you lost $10,000. Well, that loss, if it's wiped out all of your other income, you can carry it back to a year, the previous 2 years, to when you had income, and claim that loss against other income. And a lot of people miss that deduction, the net operating loss. And then the other thing is mileage for charity, medical, and business.
Before I go away from that, whenever I teach the tax class, that's always a big thing, is the students always want to talk about NOLs and things like that. And so, but it's often missed. And so you really want to take advantage of it.
So if you've lost money, you don't lose. It's not like it goes nowhere. If the bottom line is a negative, then you have a potential net operating carry back.
Right.
And you can use it against other income.
And then also, before you go on to your next point, I was doing a tax return yesterday for a client who got a lump sum of Social Security. And so we did a lump sum election. So they got a big payout of Social Security for 2016. Don't forget to take advantage of the lump sum election.
And the lump sum election is when you go back to the base years when maybe, and let's face it, if you're somebody that's applied for Social Security disability, you know that they make sure that you are poor.
Right.
And so in the base years, you had very little income. When you go back and do the lump sum election, you go back to the years when you didn't have the income.
Right.
You tax yourself as if you had that income in those years, and you end up saving a lot of money.
Pretty
on
good.
This year's return. All right. I'm Esther Gulias, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. We have 10 days left. 10 days. And tomorrow's Sunday. And by the way, we have our offices open on Sunday, 2 of them, at the McKinley Mall and the Niagara Factory Outlet Mall. We have an outpost out there where I think Honey's used to be. Honey's Chicken Place?
Yeah, I think so.
And so we can help you during mall hours. And tonight, our corporate office on 2475 Niagara Falls Boulevard is going to be open until at least 8 o'clock for you people that want to just walk in.
I've discovered there's a lot of late filers this year. Sometimes my clients that I usually see in February. I'm seeing now, and it's just strange because I think everybody heard they were holding up refunds, and so that's the reason, I guess.
And then everything else is late, too.
Yeah.
The 1095As were late. People were telling me the other day that they just got their brokerage statements like last week, and they said, what would have happened if I would have come in February? You would have done it wrong.
Right.
Okay, don't forget your mileage for charity, medical, and business.
Right.
And that includes rental property. There's a lot of rental property in Western New York. Going to pick up the rents, going to Home Depot, all that kind of stuff, all that mileage is deductible on your rental schedule.
Yeah. And so you want to make sure you keep a mile log because, there's no better place to put it than in your car or your glove compartment because you're always running out and sometimes you miss it.
Right. Well, you can't. And the worst thing is if you don't know about it, then you really miss it.
That's right.
Another thing is moving expenses. If you've moved 50 miles closer to your job, like for instance, if I had a couple last night that moved from South Carolina to Buffalo,
Right.
and that it just was so cute because I said to them,
Yeah.
and while it was snowing, I said, "Why did you come to Buffalo?" And he says, "Because I'm a Buffalonian and we came back." So, and I was really happy. But you think of South Carolina and you think, But anyway, so we were able to take the cost of their moving van, the gas that they put in the moving van, the tolls. They had to spend the night, coming up.
Right.
The cost of the boxes. And all that stuff is an adjustment to income. So that's even if you don't itemize.
Right.
So all of these things add up, right?
It really does.
Okay, why don't we go back to Patty? Hey, Patty, how can we help you?
Yes, I earned a very small amount of money last year, like $300.
Okay.
From a government agency, and they never sent me anything to show that I earned that.
Now, was it wages that you had, or was it freelance income?
No, it was a wage.
Did they take out FICA?
No.
No.
Thing.
So you just got a gross check?
And I never got anything to say that I earned it.
But did they give you a gross check? You got $300?
Yes.
Okay. So what kind of work were you doing for them, Patty?
I'd rather not say.
Like maybe you were a poll worker or something like that?
No.
Okay, well, it sounds because it's gross income, then you would just add it on line 21, and you don't have to pay FICA on it.
Is that all the money that you make besides your Social Security, Patty?
Yes.
Then
Right.
you don't even have to file.
You don't even have to put it down.
Well, no, I meant I get dividends and that sort of.
Okay, so it's a line 21 entry. $300 is all you have to put down there, and it's you don't have to pay the FICA because it's under $400.
And you're okay without the form?
Even though they didn't send me anything to say that I...
there's all kinds of people that don't send people all kinds of forms. But the law says that any income that you receive that is, unless it's specifically exempt, is taxable. So if you performed a service, then it would be taxable.
Okay, another question. Could I contribute the whole amount to an IRA?
How old are you, Patty?
Over 70.
Then once you're 70 and a half, you can't put money into an IRA anymore.
You cannot.
Correct.
Okay.
Okay?
Very much.
Thank you, sweetie. Bye-bye. Could put money into a Roth.
Right.
But not into a traditional IRA. So, Okay, let's go back to the phones and talk to Mr. Ron. Hi, Ron. How can we help you?
Yes, I have a question. Last couple of years, I have a full-time married. I have a full-time job. My wife has a full-time job. Last year was the first year I had student loans for my son I'm helping out with, and credit for that went away. So I don't have any major deductions, but last year I had to pay, or I received $100 and some odd back in state, and I had to pay federal $300. This year I had to pay $88 to the state, and I have to pay $700 to federal. Now, last year I took on a part-time job. I was wondering, should I just take an additional 20 out on federal and 5 on state? Or
all right, well, let me just ask you a couple of questions. So, how old are you, Ron?
47.
All right, and how much is your income, you and your wife's, approximately?
Total gross?
Yeah.
Was like 82.
All right, and how much are your wages?
Pardon me?
How much are your wages?
My wages?
Yeah.
At the one job, gross it was 62, and the part-time job was just under 5,000.
6,200 or 62,000?
62,000.
All right, 62,000. All right. Well, first of all, you and your wife could contribute to an IRA. So you could up till April the 15th. You said you're under the age of 50, so both of you could put $5,500 in an IRA, which is $11,000. And if you have the money in the bank, for instance, just by moving it from slot A to slot B, if you're in the 25% bracket, it's going to save you around $3,000 in taxes. And it makes you move from a balance due to a refund.
And then you could also do, like you said, and do +5 or +10 on that
But
part-time
if you
job
consistently, if he's consistently working,
right,
he could always put money into the IRA every year, and you don't have to pay. You don't have to have any more withheld.
Okay, but currently I'm in I have 401s, my wife and I. But I was just basically what I want to know is, should I take the 25 and the 5 extra, or just change from married to withholding at a single higher rate?
Well, you can do either. So you said this year you owed how much?
It was a little over 700 on the federal and like 88 on the state.
Okay. So I guess what I would do is drop one allowance. You like a refund? You don't like to owe?
Yeah.
Okay. Then I would just drop an allowance on the federal. On the state, it's $88, so it's not that bad. But you could drop one on the federal and one on the state, and then you'll end up with at least a small refund on the federal and a small refund on the state. But again, even though you have 401ks, you can still contribute to an IRA, and you don't have to put the whole $11,000 in. You could just put in $1,000 or $2,000, and it may save you some money.
And then I heard you say something, Ron. I might have been wrong, but you said you're going to increase your allowances. You would actually decrease your allowances. So if you're at 2, you would drop it to married 1 or married 0.
I'm sorry. Right. Currently, I'm at married 0.
So then that's all
then
you
what
can
you
do.
Could do. No, then you do married
Plus.
0 plus, let's say 20. You get paid every week or every other week?
Every week.
Every week. So if you did married 0 plus $20, they're going to take out an extra $1,000 during the year.
So you're going to do plus 20.
Plus 20.
Plus 20 on the federal.
Right.
Well,
and then on the state, you could do plus 5.
But I'm saying I probably shouldn't claim married but withhold at a higher single rate, because then they're really going to take quite a
No, it's not. That won't make that much of a difference. You'd really have more control if you just said plus the 20 plus the 5.
Okay.
Okay?
Okay, thank you.
All right.
Very much.
Thanks, Ron. Okay, now there's an example of, where an IRA would have saved them money. And a lot of people say that to me. They'll say, but I have a 401k. You can have a 401k and an IRA. And you don't have to do the whole maximum. You can put in a little bit. And if it saves you, if you think about it, if you're in the 25% bracket federal, 7% New York State, you're getting a 32% bang for your buck. So if you put in $1,000, you save $320. If you put in $2,000, you save $640. And your money's still there.
That's right.
Right. And especially when they're sitting there on the computer and you can show them.
Yeah, do it black and with and without, and you see the increase and what it really makes a difference.
Okay, other things people miss is their medical expenses. If you're paying your own health insurance, it is a medical expense if you're an itemizing taxpayer. Now, if this year was the last year for seniors that are over the age of 65 to have the 7.5% floor, next year it goes to 10%. So people say to me, I don't understand where the floor comes from. If your income's $50,000, you multiply it by 10%, that's $5,000.
Right.
So you get no deduction until your medical exceeds the $5,000.
And then I also want to say, if you are a married couple and that floor is really high, it might be an opportunity to look at file it separately. Yeah,
that's exactly right. So there's all kinds of things that are deductible as medical.
Right.
So it's your health insurance, your co-pays, your mileage, your durable medical supplies. Your
glasses,
glasses, dentures,
chiropractor,
all those Christian Science practitioners all go into that potential. The long-term care insurance goes in there, and special needs. If you have a child with special needs and you have them in a special school,
mileage,
that's deductible.
Travel.
Right.
Yes.
All right. Let's go back to the phones, and we're going to see Gary. Hey, Gary, how can we help you, sir?
Hey, how you doing?
Good.
Kind of a two-part question. I separated from my wife a few years back, but we're not divorced. And I have to file married but not joint.
Married separate, right?
Married separate. And any advice on that? Because doesn't that put you up into some crazy bracket?
Well, you lose. There are some things when you're married filing a separate return that they penalize you with. For instance, You can't take if you're paying student loan interest, you wouldn't get an earned income credit. You can't take daycare credits. But some of the things that benefit you are if you have large medical bills or if you have large business expenses, then it actually is beneficial to file separately. But the best way to do it is to try to do it both ways. Is she against filing potentially a joint return?
Yes.
Okay, well.
Yeah.
And are you a high income person, may I ask?
$75,000, not really. Just average Joe.
All right, now do either of you own a home?
I do, but there's no mortgage.
All right. So if she itemizes, you must itemize. That's another thing about married filing separately.
And
they
really
require you to both itemize. If one's itemizing, they both have to itemize.
And really, when you do married filing separate, your standard deduction is not that high, and so your property taxes might come into play, and so you might want to utilize your property taxes with your state withholdings. I think you're going to have enough to itemize.
So yeah, well, $6,300 would be your
floor.
$6,300 would be your standard deduction. So how much are your property taxes, Gary?
Everything total.
Yeah.
$5,000 something.
All right. So your state withholding from your W-2, you're a working guy, right?
He made $75,000.
So your state withholding must be at least a couple thousand. So you can itemize just off of those two things. And so to that, you'd add your receipted contributions. What do you do professionally?
I do sales.
Outside or inside?
Outside.
So do they reimburse you for your travel?
I mean, some of it, I expense some things, but... do
you drive around?
Some.
Okay, so your mileage is deductible at 54 cents a mile for all, not commuting expenses, but for all other mileage. So that's something to look at too.
And then I heard you say you expense some of it. The law is if you could expense it, but you opt not to, you can't take that mileage.
I mean, will they give you the 54 cents a mile, Gary, for travel?
Well, I get a mileage allowance.
Okay, so they just give you a flat rate.
That would rule out
No, but you see, that's the thing. If they give you a flat rate and you don't have to do an expense reimbursement, that means that it's in your W-2. It should be in your W-2, which means the whole thing is deductible, because that's called a non-accountable plan.
I mean, I get regular withholdings and that, but on the mileage thing, I think they give me a 1099 on the $300 a month mileage deal.
You see, that would mean they're making you pay taxes. It's all deductible then, Gary. So you may be in good shape, and she may be the one who's going to be singing "Who's Sorry Now."
Well, it hasn't been that way so far.
Well, but maybe that's the thing. Maybe you haven't been doing your tax return right. So, I mean, you'd be surprised if you leave all these things on the table, then you're not able to take advantage of them. So what I'd suggest you do, if you want, my email address is egtax@hotmail. You can send me some particulars and I'll put together a rough estimate for you.
Yeah, I mean, honestly, I need help, and I haven't filed in 3 years either.
Oh, Gary.
Come see
Auntie Esther and Tiff. Yeah.
Yeah,
we'll take good care of you.
Good.
Okay, sweetie? All right, thanks, Gary.
13 closes soon, but I guess it wouldn't be 13. He has to do 16, 15, and 14.
14, right. So, Gary, 632-7886 is where we're at. We'll take good care of you. For the rest of you, Auntie Esther and Tiff are going to go back to the office and take care of some clients. And remember, all of our offices are open 9 to 9, Monday through Friday, 9 to 5 on Saturday. Tonight, our corporate office is open until 8 o'clock. Our mall office is open tomorrow during mall hours. And if you need help, you can go to our website at egtax.com and ask a tax question, because we certainly want to help you. Until next week, I'm Esther Gulias, the tax lady from EG Tax with Tiffany Fabian. I hope to see you in the office. Talk to you later. Bye-bye.